Good afternoon, everyone, and welcome to Cutting Through the Software-Defined Hype, Insights from TBR's 1Q13 Data Center Benchmark, outlining the recent results of our Data Center Benchmark. I'm Allison Crawford, and I'll be your host for today's session. In the next 45 minutes, Analyst Krista Macomber and Senior Analyst Christian Perry will delve into the trends driving the results featured in the 1Q13 Data Center Benchmark to which you subscribe, followed by a Q&A of these trends and how they will affect you. Before Krista gets started, I'd like to cover a few housekeeping items. First, we'll be recording today's session and posting it on our YouTube site, TBRI channel. We encourage you to visit our channel to watch this presentation or any of the others that we've posted. Second, we'd like to hear your opinions and thoughts on the materials we're presenting. Please send any questions or comments to the Q&A function. We'll address them at the end of the presentation, or you can follow up with a private discussion after this presentation concludes. Third, we'll send out the slides to everyone registered for today's webcast within 24 hours of the conclusion of the webinar. You can also find these slides as well as other thought leadership pieces, webinar decks, and commentaries on SlideShare at www.slideshare.net/TBR_market_insight, and I'll be sharing all these social media links with you at the end of the presentation. Now let me introduce Analyst Krista Macomber and Senior Analyst Christian Perry from the computing team here at TBR. Krista is the lead author of the Data Center Benchmark, and Christian is the lead on our data center research. Their insight into the operations and competitive strategies of data vendors helps our clients improve their strategic go-to-market plans and performance. And with that, let me hand this over to Krista.
Great. Thanks, Allison, and welcome to all of our attendees. Today, I'd like to walk us through the state of the data center market as TBR sees it. We'll take a look at some of the key customer purchase trends that are currently going on in the data center. We'll also take a look at how these are impacting vendors' technology development, go-to-market, and alliance and acquisition strategies. We'll dive into some of the findings from TBR's 1Q13 Data Center Benchmark, which covers performance of the X86 server, proprietary server, storage, and data center networking markets. Finally, at the end of this presentation, we will give you the opportunity to have your questions answered. There are significant transitions going on in the data center market right now, and we'd certainly like to have a discussion about them. At the end of this presentation, I hope you'll walk away with a clear picture in terms of the current leaders and laggards in this landscape and how overarching trends will impact this view going forward. So let's get started. Last quarter, we discussed how new buyers are emerging within the enterprise. Responsibilities are flattening, and as a result, the influence of IT is spreading across the enterprise. This is causing customers to purchase increasingly based on business value rather than technology speeds and feeds. It's also spurring demand for workload-specific solutions. Today, when we take a look at how these purchase decisions are being formulated, I'd like to address how simplicity is key. The influence of IT is indeed spreading across the enterprise. However, budgets and resources are not growing fast enough to keep pace. As a result, this heightens the value of the relationship with the vendor to the customer. In this market, software is key to differentiation. On the purchase importance scale, management, virtualization, and automation are becoming increasingly influential. Vendors with a rich history in software development, such as NetApp and IBM, have a natural advantage, while others, such as Dell, are rapidly ramping investment in software to play catch-up. So what is the impact of this to hardware? Quality, reliability, and performance of underlying hardware remains table stakes. These are still essential buying criteria. Software is an important means to increase functionality, as well as to showcase flexibility and interoperability to solidify the workload optimization value proposition. However, hardware remains core to facilitating trust, as its quality, reliability, and performance enable uptime and efficiency. In this market, increasingly dictated by workloads and the need for simplicity, demand for converged infrastructure continues to grow. TBR's June 2013 Converged Infrastructure Landscape Report indicates that attrition has begun to converge systems. Customers in this study deployed converged systems nearly equally to both replace and to complement existing hardware. Our research also indicates that this trend is here to stay. More than 2/3 of respondents would recommend their converged system to appear. Demand for converged infrastructure is creating broad opportunities for vendors across hardware, software, and services. TBR projects an opportunity of $3.8 billion. This is just in the United States for large enterprises over the next 12 months. Vendors are taking note. In this market, currently, multi-platform competitors are utilizing integration and software that provides for seamless integration of the IT environment from hardware to applications are gaining leadership. This is evidenced by our Converged Infrastructure report. The report indicates that Dell and HP currently have leading converged infrastructure installed bases. We believe that these vendors are utilizing their expanding software capabilities to deliver a message of simplicity and workload cost-effectiveness with their converged systems. However, this doesn't mean that vendors such as NetApp and Cisco are sitting back by any means. Cisco is a pioneer in converged infrastructure and is taking steps closer to NetApp, particularly through tight integration of their management capabilities to facilitate sales of their joint converged offering, FlexPod. As hardware and workloads converge, the customer's IT environment becomes more simple. However, the competitive landscape does not. It is becoming increasingly crowded and increasingly complex. Customer demand for a best-of-breed workload-optimized approach is morphing traditional partnership models. It's forcing vendors to balance an intricate web of product development and go-to-market relationships in order to capitalize on these converged opportunities, as well as to attain their corporate objectives. While this does create the risk of muddled or detrimental market messaging, we believe that customers will listen as vendors carefully articulate the value of these joint ventures. This is particularly evidenced in Cisco. Cisco has a history in balancing a very robust network of partners, and it's applying that strength to capitalize in its core market, data center switches and routers, on opportunities created by demand for converged infrastructure. It's also using close relationships with competing storage vendors, NetApp, EMC, and HDS, to bring a number of converged converged systems and reference architectures to market. Through using partners to extend its technology capabilities and its market reach, Cisco will protect its dominance of the data center switching and routing market. Our research also shows that Cisco is rapidly becoming a leading contender in the X86 server market, and as a result of this strategy, we expect continued share gains for Cisco in the X86 server market going forward. These new competitive dynamics are also evidenced by Dell and Oracle, which announced a partnership in June 2013 for Dell X86 servers optimized for Oracle software. Although the two companies offer competing x86 server offerings, they have now partnered in this market to fuel their core growth initiatives. On the part of Oracle, we believe that this is a de-emphasis on x86 server sales so that Oracle can push the cost of satisfying the compute needs of its installed base while still generating revenue opportunities around database licenses, which are Oracle's ultimate objective. For Dell, this partnership is another step in its strategy of using its robust x86 server portfolio, as well as its channel recognition, to establish itself as an end-to-end solutions provider. Now, let's take a look at the financial performance of some of the product segments. Of course, there's strong opportunity in this market, particularly around converged infrastructure. But vendors are still figuring out precisely how to tap these opportunities as value and functionality increasingly shifts to software and services, with demand for cloud delivery models and hardware-agnostic infrastructures. Vendors such as IBM are considering their hardware assets and how to best position these to capitalize on these opportunities. They're investigating divestitures and where to best funnel their investment. We discussed the impact that this is having on their partnership strategies, but vendors are also refining their supply chain and their sales and marketing strategies as well. We believe this market is in a period of flux, and there's splintering within the market in terms of the competitive landscape, as avenues to exponential growth are generated for newer competitors, while other competitors might be losing market share. This is particularly evidenced in the X86 Server Market, as Cisco is using its convergence-led strategy to establish itself as one of the leading providers of X86 servers. Other vendors, such as HP and IBM, are losing share. Additionally, this is creating pressure on vendors' bottom lines, as they're having to invest in new areas and, again, realign where these dollars are going. We do believe that the market will move past this inflection point over the next few years and return to a stabilization of revenue and profitability, but that's not quite in the near-term view yet. Taking a look at the total revenue and profitability pools of this data center market, we certainly see the impacts of commoditization. Total data center revenue declined 5% year to year and 12.6% sequentially in 1Q13. All product segments fell sequentially, and networking was the only segment to increase revenue on a year-to-year basis at 0.3%. We believe that this is because networking is the last layer of the IT infrastructure to be commoditized, and so as a result, we are currently seeing less of an impact in this segment on traditional hardware opportunities. In terms of gross profitability, TBR estimates that a data center gross margin of 43.8% for 1Q13. We estimate that this is approximately flat year to year, although it represents a decline of 200 basis points sequentially. This is led by the proprietary server segment. We estimate a proprietary server total gross margin of 40.6% in 1Q13. This is down from 44% in the year-ago quarter and 50.7% in 4Q12. IBM has the lion's share of this market, so as a result, its performance has a significant impact on the market's performance as a whole. During this quarter, IBM did experience a 50% decline to revenue and units shipped, so this had an extremely detrimental impact to its operating margin. Now we can take a look at some of these product segments specifically. The X86 server market is certainly in flux. This is largely driven by adoption of scale-out cloud deployments. However, different workloads require different deployments to maximize efficiency, so this is creating broad opportunities within this X86 server market. Scale-out approaches in areas such as internet content delivery are certainly on the rise. However, opportunities remain ripe in higher-end engagements, such as delivering end-to-end scale-up approaches as an alternative to Unix server displacements. From the perspective of the OEMs, while many server vendors such as HP are balancing both of these approaches, we do see the beginnings of a divergence in the market between vendors focused on market share through a scale-out approach, and those focused on profitability through scale-up approaches, such as IBM's workload-specific X86-based pure system solutions. From a chip perspective, with demand for specialized chips or systems for specialized workloads, ARM has new legs to take share from Intel. Of course, this is supported by chip vendors such as AMD, which is going all in on ARM server chips as a means to grow its corporate revenue, as well as HP, which is spearheading its rebranding initiatives to become a provider of specialized systems for key workloads such as mobile, cloud, and social enterprise with hyperscale servers. Of course, Intel is going to work to also capitalize on these opportunities and protect its market share. We believe that it will use its brand recognition as a leg up, in addition to its stronger chip performance. And the vendors will continue to invest in architectures such as Atom that have lower power consumption. In terms of financial performance for the X86 server segment, competitive pricing, white box server sales caused deteriorating performance within the segment for many key vendors, including IBM, HP, Oracle, and Fujitsu. Average year-to-year revenue growth slowed from 7.9% in 4Q12 to 5.6% in 1Q13. As HP and IBM sacrificed market share to protect their profitability, Dell, Cisco, and Huawei were the only vendors to grow revenue on a year-to-year basis in TBR's benchmark. This is for a couple of reasons. Dell is becoming aggressive on pricing as a means to maximize its addressable market as it works to become a provider of end-to-end solutions. And Cisco and Huawei are newer entrants to this market that have smaller scales, and they have been investing to grow this scale. We see a continued transition in the industry towards x86 servers as a means to more cost-effectively fulfill customers' compute needs. We do see that vendors are reassessing how to best embrace this transition. For example, HP posted year-to-year unit losses of 15% year-to-year in 1Q13. As Dell reported more stable performance, its units were up approximately 0.5% year-to-year during this quarter. This does reflect a sense of urgency on the part of HP to augment its large installed base of traditional x86 server deployments through its Project Moonshot hyperscale approach to maximize its market coverage. The emergence of Cisco and Lenovo as stronger competitors in this market through investments in research and development and partnerships further underscores this urgency. As IBM continues moving towards towards a scale-up approach, we do believe that the vendor will continue to post revenue and unit declines during 2013. This is because the vendor is focusing on more profitable and sticky software and services engagements. Rising x86 server capabilities and the need for IT flexibility continue to dampen proprietary server demand. We believe that this market is consolidating as Unisys shifts its mainframe portfolio onto Intel's Xeon architecture, Intel's Titanium roadmap remains uncertain, and competitive displacements are increasingly needed for growth in this declining market. As a result, we believe that vendors are going to be competing more fiercely for growth. IBM's performance during 1Q13 underscores challenges that this market is facing at large. Despite billions of dollars invested during 2012 and decades of experience in growing this business as a result of product innovation that maps to emerging business pain points, IBM's revenue and units were both down more than 50% sequentially during this quarter. We believe that IBM and Oracle in particular will go head-to-head in both direct and indirect sales channels, as they will work to drive a message of superior performance, as well as a value proposition that is focused on really workload-centric cost-effectiveness to justify the higher price points of these systems and to capitalize on demand. Of course, rapid innovation will be necessary in this market to continue driving that value proposition. We believe that Linux will be an area of particular investment for vendors as they work to capitalize on demand for workload consolidation, particularly in distributed environments, through enabling a lower total cost of ownership across hardware, software, implementation, and management. Another reflection of the challenges that this market is facing is HP's unification of its server business, its business critical, and its industry standard server businesses under one umbrella. We believe that this positions HP to better respond to customers' migration of workloads off of Unix servers and onto X86 servers. And we believe it also positions HP to potentially gradually phase Itanium servers out. This declining market is reflected in vendors' financial performance in the proprietary server market. Average revenue declines fell from negative 8.7% in 4Q12 to negative 24.5% in 1Q13, and no vendor was able to achieve growth. In addition to customers opting for X86 alternatives, this is also because many customers were awaiting new products from IBM, Oracle, and Fujitsu. We believe that these three vendors are committed to stabilizing their revenue performance. And as a result, they will continue investing in product development and acquisitions to generate new value. We see this with IBM and Oracle, which are planning to release details soon regarding their next generation RISC processors, as well as IBM's CSL acquisition. As Fujitsu and NEC struggle to expand outside of Japan, and both struggles to expand outside of France, we believe that IBM and Oracle will gain share of this market, although it is declining. Changing gears slightly, I'd like to take a look now how, in the storage space, there is also demand for purpose-built systems on the rise, as well as in this space we see strong demand for unified management and analytics. This is a result of data which is increasingly being positioned at the center of customers' business models and their IT infrastructures through adoption of hybrid cloud environments, social enterprise, and mobile computing. We see that simplified support of heterogeneous environments is increasingly driving portfolio and go-to-market efforts of vendors. This is evidenced in EMC's Viper controller launch, as well as NetApp's positioning of clustered ONTAP as its leading differentiator during 2013. With the need for continued improvements to performance and efficiency, we believe that the flash market will rapidly develop during 2013 and 2014. Large vendors such as IBM, Dell, EMC, and NetApp will drive maturity of this market by investing in R&D and acquisitions of smaller players. Also, they will educate their large installed base to help drive adoption. Educating customers is important in this market as they seek to really navigate this big data growth and generate greater value out of this data. We see this in particular in the Hadoop market. We believe that the Hadoop market will become crowded from a vendor perspective as IBM, EMC, and HP all work to use converged infrastructure offerings with Hadoop distribution as a means to capitalize on IT's shift to lines of business. By using these systems to mitigate complexities of using Hadoop, vendors will enable customers to better leverage their data. This will heighten the value proposition of vendors, as well as help to solidify the strategic nature of their relationships with customers. This will be particularly important for the pure-play storage providers, such as EMC and NetApp. In the storage market during 1Q13, we saw that revenue losses increased from negative 2.4% year-to-year in 4Q12 to negative 8.3% in 1Q13. We believe that overall, spending was soft in the large enterprise segment, as well as in developed markets. We believe demand is stronger comparatively for network-attached and unified storage offerings, particularly as mid-market customers seek to build out easy-to-use and cost-effective storage implementations to help to more efficiently store their data and also to gain greater value out of it. This is an important means for these customers to be able to better compete against larger competitors. However, revenue growth in the mid-market was challenged by competition, including pricing, during 1Q13. EMC invested in expanding the channel, as well as in bringing a portfolio of mid-market focused offerings to the market. And as a result, we see that it's established itself as a strong competitor in this space. Also, HDS benefited in 1Q13 from a robust pipeline of mid-market demand. In 2013, IBM, Dell, and HP are all squarely targeting mid-market storage implementations as an important means to their corporate growth. So competition in this space will remain very strong during 2013. In the storage market as a whole, we expect an incremental decline to gross margin. This is because vendors are investing in flash caching and storage management software to help to enable those hardware-agnostic IT environments for customers. NetApp, we believe, is well-positioned to weather these dynamics because it already has established a strategy around delivering commodity hardware that is differentiated with ONTAP, its operating system. So with a stabilizing top line, we believe that the vendor is positioned to protect its profitability in this market going forward. To round out our view of the data center, in the networking market, performance and reliability achieved through management software is also a driving force behind vendors' go-to-market and development efforts here. What we're seeing is that software-defined networking capabilities are enabling customers to better allocate their networking resources as compute and storage workloads might require. This is disrupting how vendors are investing in terms of R&D, in terms of sales efforts, also in terms of acquisitions. And it's also impacting how customers are purchasing and deploying networking offerings. However, we do expect a net increase in revenue opportunities through software-defined networking. Of course, these are going to be in software and services, but they will be on top of those existing hardware opportunities. When looking at driving adoption of these newer technologies that push the boundaries of how more sensitive data is moved and accessed, what we see is that key players such as Cisco are investing in security to help to quell customer concerns and drive adoption of their offerings. The formation of the Open Daylight project in April 2013 by key players such as Cisco and Juniper indicates that software-defined networking trends are here to stay. This collaboration is driving development of products such as Cisco's Open Network Environment Controller, which is a key element of Cisco's software-defined networking portfolio. It will also help to drive development of a developer community. However, for as much as vendors are collaborating, we believe that they will also compete to monetize on the applications and services that are written for this new abstraction layer that the Open Daylight project helps to facilitate. So we discussed that networking is the last layer to be commoditized, and this is evidenced in the financial performance. Average year-to-year revenue growth in the networking space was 3.8% year-to-year in 1Q13, and this was fairly well distributed across the vendors. In terms of taking share, we believe that Dell is well positioned to rival HP, Brocade, and Juniper as it rapidly increases its investment in this space and integrates networking as part of its end-to-end solution strategy. These solutions will be particularly focused on mid-market customers. However, this will come at the price of profitability for Dell. We believe that Dell does have a very high expense structure in this space as compared to its competitors, and that it will not be able to overcome this in coming quarters. We also believe that with its QFabric offering, Juniper is well positioned to gain share. QFabric is helping Juniper to expand its reach across the data center, and it's also helping Juniper to meet demand for workload optimization and infrastructure standardization as a means to efficiency and simplicity for customers. I'd like to just take a step back now and recap the key trends that we have discussed today, as well as the key trends that we are keeping an eye on here within the data center team at TBR. These trends center around the fact that workloads are driving customer decisions. They're driving customers' purchasing trends, as well as the way that they are deploying their infrastructures. With this demand for dedicated systems, we will also be keeping an eye on the rise of the hyperscale market here at TBR over the next few quarters. Of course, these hyperscale deployments will be focused in areas such as web and content delivery. In this market that's evolving towards converged infrastructure, we will take a look at how customers are tiering their servers. We'll be investigating hyperscale server deployments, traditional X86 server deployments, as well as proprietary server deployments, and investigate which workloads customers are deploying on these and how the vendors are responding. With that, I would like to turn the call back over to Allison so that we can take some of your questions.
Thanks, Krista, and thanks to those of you who've sent through questions. I do encourage anyone that has any questions to send them through now, either through chat or through the Q&A function. Krista, the first question we had that came through is, you mentioned the industry being at an inflection point in terms of revenue and profitability. Can you please elaborate?
Certainly. Where we're seeing this most significantly is in the server segment. So we did discuss the exponential declines to operating margin that the proprietary server market is facing. We believe that in fact these margins are becoming closer to the X86 server margins, and that going forward there will be a smaller gap in between these two segments than we've seen previously. The good news here for the proprietary server vendors is that we do expect that the proprietary server gross margins will remain a little bit more stable following this steep drop than in the X86 server segment.
Okay. The next question that came through, in the converged infrastructure space, is it clear if a reference architecture or a pre-integrated approach is going to win?
At this point in time, I would say that we believe that there isn't a one-size-fits-all approach to converged infrastructure. We think that while customers do want to avoid vendor lock-in, and the reference architecture approach is an important step in this process. However, the pre-integrated solutions do take out the hassle of the customer assembling the system themselves, which is an important, which is attractive to customers.
Right, and we're seeing more and more open architectures being built into the pre-validated solutions out in the converged infrastructure market. But in terms of reference architectures versus these pre-validated solutions, we do, to Krista's point, we do feel that there's a space for both on data center floors today. It depends on the workload requirements within those environments and really the existing infrastructure that's within those environments. So there's a lot of variables that will help to shape the converged market moving forward. And again, certainly plenty of opportunities for both types of architectures.
Okay. The next question we had come through. Looking at the proprietary server space, can you talk a little bit about the dynamics between Unix servers and mainframes that you foresee going forward?
Certainly. So when we look at the proprietary server space, we believe that the attrition at x86 is primarily occurring in the Unix server market. We believe that there are currently stronger use cases for deploying these workloads that traditionally were on Unix servers in the x86 server space. Additionally, when we look at mainframes, these mission-critical workloads that run on mainframes do still require the reliability and the performance of these proprietary chips, and we do not foresee that going away anytime soon. Additionally, it would be very, very costly, complex, and risky for for customers to migrate their applications off of mainframes.
Right, and we've seen this for a long time. People have predicted the death of mainframes for 30, 40 years now, and it just doesn't happen. It's a very complex process to pull even a single workload off of a mainframe because you don't know how that's going to affect the rest of the environment. So, not to say that those workloads can't be used on other architectures, because they certainly can. But there's going to be a place for mainframes moving forward. So in the overall proprietary server market, we do feel that if there's any stability, it's going to be on the mainframe side.
Hey, it doesn't look we had any additional questions come through, so I'm going to give folks another couple minutes in case there's any last-minute questions that you have for either of the analysts. So with that, I think it's time to wrap up. As promised, here are all the social media links. I encourage you to follow Christian and Krista, as well as TBR on Twitter at the Twitter handles listed here, and to join us on social media at SlideShare, YouTube, and we do have a LinkedIn user group where we talk a lot about our research, and you can get access to conversations there as well. As you are leaving the webinar, there's a quick survey with 3 questions. How good was the content of the presentation? How good was the presenter? And if you have any last-minute open questions that you'd like us to focus on in the future. We are collecting this information and putting it into our research agenda from quarter to quarter, so your feedback is very important to us, and we look forward to hearing your responses. I'm going to leave the chat function open for another couple minutes just in case you have any additional questions you'd like to speak with the analyst with. And if we don't hear from you now, there's a couple quick things I should remind you of. We are doing a Converged Infrastructure webinar in September, so please be on the lookout for that invitation coming through. And there's been a couple of articles lately, one namely that Christian and eWeek did that you might want to check out as well, so you can look for that online as well. Thanks, everyone, for your time today, and we look forward to speaking to you all in the future. Have a great afternoon.